So you can see on my last upload, I called out RMSG right here at $1.94. And if we look on the chart, you can see that this one ran from $1.94 all the way to just around $3.50 for a massive 80% gainer. So drop a quick like for me on this video if you are enjoying this content, and make sure you have that notification bell turned on for these videos because these plays are extremely time sensitive. But you can see on this chart, this was actually a multi-day runner, so a pretty solid play right here. In this video, I'm going to be talking about a $1.50 penny stock that has no dilution, and they have never conducted a reverse stock split. This is a profitable company that did $142 million in total revenue last year, and they just recently reported one of their best quarters in years. So this one is extremely undervalued, and this is one that has not diluted any shares in the last decade or more. If you actually look at this, the outstanding share count has actually went down. So this is one of the safest plays in regards to dilution. So just this week in the stock market, we did see ticker BYND have a historical short squeeze from 50 cents all the way to $9 for a 1,600% move. So the penny stock I'm going to be covering is in a very similar sector to ticker BYND. So this is a potential sympathy play to BYND, which just had one of the biggest squeezes we have seen in a very long time in the markets. And this one is still squeezing as of today. It is still up 100% plus. So the stock I'm talking about is ticker GTIM, Good Times Restaurant. So this is a company that owns, operates franchises, and licenses 39 Bad Daddy Burgers bar restaurants through its wholly owned subsidiaries. Bad Daddy's Burger Bar is a full-service, small box restaurant concept featuring a chef-driven menu of gourmet signature burgers, chopped salads, appetizers, and sandwiches, with a full bar and a focus on a selection of craft microbrew beers in a high-energy atmosphere that appeals to a broad consumer base. Additionally, through its wholly owned subsidiaries, Good Times Restaurants Inc. operates and franchises a regional quick-serve restaurant chain consisting of 32 Good Times burgers and frozen custard restaurants located primarily in Colorado. So this is more of a fast food chain. And if you look on dilution tracker, guys, you can see they are cash flow positive, and they haven't diluted any shares according to this. The outstanding share count has actually went down since 2016. They have never conducted a reverse stock split, and they have zero dilution filings available, and their market cap is only sitting at $16 million, and they just did $142 million plus in total revenue last year, and they are profitable. So this is one of the most undervalued companies in the entire stock market fundamentally. The free float is sitting at 7.8 million shares. So I haven't really seen any insiders sell any shares. Actually, the last Form 4 that came out, I believe, was an insider purchasing shares at $1.58 per share. So this was a director. They purchased 3,800 shares for $1.58, which is actually currently higher than the current stock price. But, we haven't really seen any insiders selling heavily or at all, really, as of lately. So that's always a really good sign, especially when a stock is sitting at lows, because, that means they probably aren't going to sell down here if they didn't sell when this one was trading around $3 per share just in the beginning of this year. So a pretty safe play. It is looking to be bottomed out. I have noticed a ton of accumulation taking place on the chart, so we're going to look at that. And I do want to remind you guys that trading penny stocks is extremely risky, and I'm not a financial advisor. I'm just showing you plays that I do think have potential, but at the end of the day, you have to go out and do your own homework and your own research before even looking at these. This one is currently trading around $1.50 per share, and the market cap, like I said earlier, is sitting at only $16 million, and this is a company that is trading near the 52-week low. We actually are coming off of a double bottom, and just recently, last week, this one dipped down to 124, and these dips instantly got bought up. So I just really think this one is, should be trading around $3 plus minimum based on the fundamentals alone. Because, like I said, guys, they're doing, 150 or just around $150 million in total revenue each year, and they are profitable. And they just reported one of their best quarters in terms of profitability in the last few years. So there's no reason this one should be trading this low. And some resistance levels to look out for is this 50-day moving average right here around 163, the 200-day around 192. We have some resistance at 183. And, the next biggest levels short term are around 234 and 264, just around these areas on the larger time frames. Now, whenever this one does get volume, I will be looking at the smaller time frames to see where new resistance does start to develop. And on the weekly time frame, we do have the same double bottom setup. Looking at something else, the average volume for the last 3 months is only sitting at 26,000 shares. So there's not much liquidity coming into this stock right now, but fundamentally, this is one of the strongest and most undervalued small cap plays that I've ever seen. Looking at their balance sheet, you can see that they do have $3.1 million cash in the bank. Keep in mind, you always add 3 zeros to these numbers. Total assets are sitting at $86 million compared to a tiny $15 or $14 million valuation. And total liabilities are sitting at $52.7 million with very minimal long-term debt, only $2.3 million in total long-term debt. Now, looking at their most recent financials that came out, they did $37 million in total revenue, and they had $1.5 million in net profit. It was one of their most profitable quarters in history. So you can see the quarter before this one, they lost $624,000. They profited $164,000 before that. And exactly, just around 1 year ago, they profited $1.3 million. Okay, so this was by far, one of the biggest improvements we have seen with their margins. 2024, they did $142 million in total revenue with $1.6 million in net profit. Looking at their cash flow quarter over quarter, for the most recent quarter, they were cash flow positive. And even the quarters that they were negative with their cash flow, they really weren't burning that much. So they burn around 311,000 right there, 830,000 and then, 966,000, but they do have over $3 million cash in the bank and they are profitable. So as long as they continue to improve their margins, especially like this last quarter, their cash could increase depending on their operational cost and their expansion plans and stuff like that. So either way, guys, just considering that this one is sitting at a 15 or under a $15 million valuation, doing this much revenue, and it is growing every single year, it's just showing that this is probably one of the most fundamentally undervalued penny stocks in the entire market. Just to show you guys how undervalued this company is, I'm going to compare it to ticker HOUR, which is another company that is sitting around an $80 million market cap. And keep in mind, GTIM is sitting under a $15 million market cap, doing more revenue and being more profitable than ticker HOUR. So you can see ticker HOUR did $138 million in total revenue last year with only $600,000 in net profit, compared to GTIM doing more revenue at $142 million and, double the profit HOUR did. And keep in mind that ticker HOUR is just a reselling business through a third party, and GTIM has a physical foundation and a more legitimate business that is also tariff proof. This is something you should really consider. And I believe that's all I have for this company, guys. If you did make it this far in the video, I really do appreciate you for sticking around. And let me know in the comments what other plays you're watching, what you think of this play, and I will see you on the next video.